Welcome to the Slice of Mentorship podcast. I'm Igor Gorlatov, your host, and today we're excited to have Ihar Mahaniok with us, managing partner at Geek Ventures. Ihar is a visionary investor in early-stage tech companies that are changing the world with a particular focus on supporting immigrant founders. With a track record of backing unicorns like Instacart, PandaDoc, People AI, Ihar's passion lies in discovering and empowering talented entrepreneurs from diverse backgrounds. He is on the lookout for innovative solutions to all problems, and today we'll explore his investment philosophy and the impact he is making. Let's dive in. Hello, Ihar. Thank you so much for joining our Slice of Mentorship podcast.
Hi, Igor. I'm really honored to be invited and really interested always to talk about mentorship. And it's great that you are talking about this with your listeners.
So before we jump in, could you give a very high-level overview of your background and what's your connection to mentorship?
So I have both an engineering and investing background. I worked in a big tech as an engineering leader, and in parallel, I've been an angel investor, and most recently, I'm managing partner at a venture fund. What the connection to mentorship? So when I transitioned from being a software engineer to being an engineering manager for the first time, that the big part of that was helping others, right? So helping people to become better, so helping growing people. And I think the most difficult or most interesting is to help people grow from engineers to managers themselves. And that, of course, involves a lot of coaching and mentorship, while at the same time, an investment process, especially early stage investment, involves a lot of mentorship and sharing information and helping and advising founders. I've invested in about 200 startups, and often the founders are doing it for the first time and they don't know exactly how to approach a lot of things, while I have seen some things repeat between different founders, between different startups. So it's a very important part of investment processes to help the founders to not make the same mistakes, and also be the person that they can come with questions and brainstorms and so on.
Now, I wanted to unpack this a little bit because there are different types of founders. Some founders are more coachable, some founders are less coachable. This coachability aspect, does it influence your decisions whether to engage with the CEO or with this particular founder?
Of course, absolutely. I found that the best founders are coachable and the best founders listen. And still, the very best founders don't follow blindly. They listen to everybody and make informed decisions. Right. So what I found is that sometimes it's difficult to understand if the founder is coachable before you make a first investment. So that's where the ability to make follow-on investments is very critical, right? So that when the founder shows that they are less coachable, they are basically limiting any potential of follow-on investments from existing investors. And I found that it's very important distinction between being confident and being stubborn, right? So a lot of founders have to be confident. The only way to grow really big company and go through a lot of difficulties and challenges is a lot of confidence and grit and ability to persevere. But at the same time, sometimes some of the founders are stubborn in the sense that they think they have found the only path possible, they found the only decision possible, and they are persevering in the same manner, while that manner doesn't seem to be helping them, doesn't seem to get to the results. And what I found is that the best founders are both persevering and flexible and listening, and are looking to get as much advice as possible, and are looking to see how different people perceive things, because one of the benefits of advising and mentorship or coaching is to hear different perspective, either from a person who has a different experience or from a person who has a different personality. And often it's just like a different way to process the same information, right? So I found that that if the founder hits a rough patch, being open to mentorship and advising is extremely helpful.
So what's your philosophy on providing advice to founders?
So I think the key there is that advice should never be a demand or an instruction, right? So as a minority investor, as a typical angel or VC investor, obviously I never take a significant or majority stake. I always defer to the founders because it's their company, it's not my company, and they are the final decision maker. So what is important is that I give advice only as much as is being asked. I give advice only as much as they want it, right? So, and as I said in the previous question, some founders just don't want advice, or they ask and they don't take any of it. So you see that they don't really need advice even when they formally ask for it. So the important angle there is that when you, and this is also like my advice to other investors, especially beginning angel investors, is this is why you invest in many companies, that some of them will benefit from your efforts to help, some will not, right? So, and basically my philosophy there is that I advise and help companies which benefit from my efforts, which listen, and I advise less the companies that don't need it. Either they don't need it because the founder is not appreciating my advice, or founder doesn't feel they need my advice. And by the way, they could be totally right? So I'm also, not every of my advice is correct. Or they're just doing so well that I just don't have anything to add, right? So things are going really, really well. While the companies that benefit from my advice, I focus a lot on them. And another like sub-angle there, that companies that benefit from advice are both the companies that are doing very well and companies that are struggling. Because the companies that are doing very well, they still can do better. It's very important perspective if the founders want to listen. And of course, every day for a startup founder is a race, and they cannot just stop, right? So they need to be better and better and better, or at least maintain the speed. While at the same time, sometimes companies are struggling, and I love to help those as well.
And how is that structured? Like, is there some formal arrangement where you have conversations with founders, you agree on some check-ins, or is it more like, oh, I'm available to you, you can reach out with questions at any time? So how does it typically work, this relationship?
So for me, the best way that I found is that it's free form, but both ways, meaning that if I'm very open to founders, they can reach out anytime and they ask me for advice, and we schedule a call for the next few days. Or if I didn't hear for a while from a founder, we didn't talk for some time, maybe several weeks, maybe a few months, I reach out to them as well and say, hey, let's talk. Let's see. And what is important there is that when I ask them to talk, I don't ask them, hey, I want to tell you what to do. I ask them, I'd love to learn what's happening in your company, what's new, and maybe I can be helpful. So, and then sometimes in these calls, they share something that results in, in them asking for my advice, and I give advice. Sometimes they don't want it.
So the program I was involved in, like based on MIT VMS model, had very strict principles around mentorship, which kind of prohibited mentors from investing, to create the safe space so that companies could share openly bad news, they could share openly their concerns, challenges. in this relationship where you are an investor and there is an expectation from a company that you either give them money or you will lead or will participate in a follow-on investment, do you see that playing a role in those conversations that companies want to kind of project the better versions of themselves, or are you able to like foster those very authentic relationships still?
It's not black and white, and there is definitely. So first of all, I think that mentors that gave company money end up being in a situation when their opinion and advice is valued more than mentors that didn't give company money. So because money and advice together are really, really valued by founders. But at the same time, yes, there is this thing that when the company angles for your more money from you, they want to present the better version of them. But the approach there is, what I found is that with 90% of the portfolio founders that I invest in, I'm able to foster a relationship which is much more akin to the mentor than to potential investor, right? So, and I see that in the vast majority of cases, I end up getting way more information, way more candid information than other investors. And here are a few factors why. First of all, even though the follow-on investment is possible, I try to make sure to really make sure that the expectations are low from the founder perspective on the investment, and especially on the size of it. And second, we are a small investor, right? So when we invest like 100K or 200K, and maybe our follow-on will be another 100K, for most startups, it's not a life-changing money. But on the other hand, part of our value add is that we can help them close multiple $1 million investments, either through our network or through helping them to present themselves or negotiate. And that's where they do like a trade-off, right? So, and really better founders don't try to paint beautiful picture for us to invest 100K. They paint a complete picture for me to help them pitch and land the $1 million investors, right? So, and basically, and then it's not about not even pitch, but like change the business, improve the business, get into position several months down the road where they will be able to close those millions of dollars, right? So, and this is where it's long term, right? So they will have maybe 30 minutes or 60 minutes with that potential investor to give $1 million in 3 months. But with me, they have multiple hours ongoing over these 3 months to prepare their business, their vision, their pitch in order to have the highest chance. So that's a way where we are more like a mentor. But also because we invest money and we speak with a lot of other investors, our opinion really comes from experience, much more than more like a business mentor kind of business school expert guy.
Very cool. And I think you shared essentially your value proposition. Even though you are a small investor, you are unlocking doors for founders and you're making yourself available to them so that they can get the bigger round. And
so the way, just to add to that, right, the way I mentioned to founders, right, when we invest, the moment we decided to invest, we move to your side of the negotiating table. We start negotiating across, and then after we sign a check, we move to your side of negotiating table, and we help you with all those other investors.
This is very cool. And I wanted to stay on this point of your role because you started talking about the value proposition of Geek Ventures, your fund. So in a way, you created a venture fund, which is a startup of its own, right?
Yes.
So it's a company, you are building it. So have you leveraged mentors or advisors on your journey to build this organization?
Yes, of course. So I don't have a very formal 1 or 2 mentors that I meet on a regular schedule, but I'm actually very open to one and I'm looking for one. But I've talked with dozens or maybe 100 of people who had done something like this before. I think that the biggest opening into the community of VC managers was done through VC Lab. That's an accelerator for venture capital firms. And I joined it back in 2021 when I just thought that I could become a VC. And first of all, it's run by people who have been doing investments for a long time, Adeo Rese and Mike Suprovici, and they also connected me to a lot of other experienced VCs who have created their own firms and who've gone through this process, right? So, and it is a big difference between just investing as an angel and building a firm, right? So, and yes, I found this, like, this is a completely new challenge comparing to the angel investment. But yeah, what I found is that by meeting the people who have been partners for a while or managing partners or founders of venture firms, the main thing that I talk to them is not just what kind of startups you invest in, or maybe you can share some of the deals and so on, like much more like day to day, but more like, foundational things, right? So, how do you think about growing your firm, growing your team? How do you think about, expanding your investment thesis, things like that? How do you think about overall your place in the ecosystem? Like all of those much more key questions.
And if you could share 2 or 3 pieces of advice that were the most instrumental on your venture capitalist journey.
So really good question. I think the very first piece of advice was don't be just a jack of all trades, and figure out which area or niche you're really good at and how to differentiate yourself from other investors. I found it's investing in early stage immigrant startups in the US. And I found that this advice was really super valuable, right? So because every VC angles to return a lot of capital, right? So, but how do they do this? How do they approach it is critical. Second is, of course, build a enduring firm. And this is the thing, right? So it's like commit yourself, right? This is also an advice that I give all founders that want to build a startup, is that only do it if you can see your 100% focus dedicated to this for many, many years ahead. And this is something that I also give advice to both founders and other VCs, is that don't try to build VC on the side. VC is not a part-time business. Do it as full-time, as a real career thing, and only do it if you can foresee yourself doing it for the next 10, 15 years.
These are great pieces of advice, and I'm glad that they kind of apply not just to VCs, but to, of course, startups as well. Let's take a step back. Like myself, you're also from Belarus. So I'm curious about your journey from Belarus to the US and how this immigration, so you're an immigrant yourself, affected your career trajectory.
That's a great question. So I actually immigrated twice, because I moved from Belarus to Switzerland for 6 years, and then moved from Switzerland to US, and I have been 10 years in the US already. And the immigration, of course, opens you to a new culture. And for most people, it's a significant change in how things are being done, in culture, you have to adapt to how things are being done. And one of the in the huge benefit that immigrants typically have, that after they adapt to the new culture, they become conduits of both cultures, their original culture and new culture, right? So, and this is what I find is why I can be a really helpful resource for both immigrant founders and American LPs, right? So where I can mentor founders, especially the Eastern European founders, because I'm from there, but a lot of founders that have more like this style of communication, how to properly adapt to US culture faster, right? Faster than just being thrown in the deep end of the swimming pool and trying to swim there, right? So it's a very important part of being able to be successful in the US is cultural adaptation, because US approach is so different from a lot of countries, right? It may be more similar to Western Europe, but it's very different from Eastern Europe, very different from Latam, very different from Asia. And me having gone through that process and having gotten a lot of my own painful experience initially, but then figuring this out helps helps those founders. But it also helps my American partners to understand those weird, different guys and who are coming from abroad and who are either extremely direct or they don't understand American way of communicating, and sometimes there is frustration from my American side partners, and I can help them to understand those people. So that's a big part where immigration helps. But also it helps me to understand this like very intangible benefit that comes from being an immigrant, right? So, and it's hard. Being an immigrant is extremely hard. And what I see is anybody who came through this journey, especially recently, especially if they became an immigrant in the last couple of years, they are extremely well set to be a more successful founder because they have gone through complete difficulty and they have shown that they can do it, because they're much more focused on their success right now, because that's the thing that will help them cement themselves and really get their own place in this new world. And they have this wider view of the world than people who have been in one country their whole life. And they have access to more resources because they can get labor from maybe cheaper place, or they may have access to money from different countries, like things like that.
Very cool. I think you've tapped on a lot of different pieces, but I wanted to talk specifically about this culture differences. You mentioned some being very direct for speaking of people from Eastern Europe. Could you talk a little bit more about those differences and what have you found helps people adapt faster? Like what advice do you give to founders to adapt faster and to kind of be more American?
So there are lots of different cultures, lots of different differences, but let's take like an example for the sake of time. For example, Eastern Europeans and people from Israel and people from Latam so on are much more direct than Americans. And this directness can manifest in different forms. Like, for example, the founders are much more open about what's happening in their companies, often much less hyped, and are sometimes less optimistic in the way they pitch, but also they expect a lot of direct answers. How it manifests often is that when the founder presents their startup to an American VC can sometimes feel that a startup founder is not positive enough, is not talking enough in this like passionate approach, and it's a lot of negativity, and also maybe sometimes it comes across as brash, as maybe rude. And then what happens is that after this call, American VC says very typical thing, saying like, I really like the presentation, it's really interesting, let's be in touch. And from American VC, it's a very clear, pure sign of politeness, that yes, give some positive encouragement, give some nice words, say we will be in touch, and then never be in touch, and then say, yeah, of course, we're never going to talk to that founder again. For the founder that doesn't understand this, it often becomes a soft commit. I've seen the founders that tell me that, oh, I spoke to this American VC, and they're super interested. They're soft committed for this amount of money, and they're looking at my startup while I check with that VC, and they're like, no, we passed. It's like, how can you have more significant miscommunication on both sides, and how to fix it, right? So we should fix it on the founder side, first of all, of course, right? So I'm not asking, American VCs to just suddenly be less polite. But for founders, be very clear in maybe asking additional questions when you hear that people are interested. Is like, what are the next steps? That's a good question. Also, never ever count on commits. So I actually wrote a whole post about that. Soft commit means nothing. The only commits that make sense if somebody has signed a document, wired you money, or at the very least wrote you an email saying, we have committed this amount of money, right? So it's like anything else, anything you hear, anything that's like, sounds like people are interested and they might invest or they are looking at the deal is not a commit, right? And be very, very ready that the funnel, especially in the US venture ecosystem, is dropping off very significantly. You will have 100 calls, 20 of them tell they're interested, and 1 of them will invest. Yeah. So, but at the same time, how do I advise is like read books, watch US TV or movies, just to understand how people talk. Go to US networking events, in person if you're in the US, or at least online if you are abroad, and try to immerse yourself as much as you can. And ask feedback. Ask feedback. That's important. Ask feedback, ask advice from your existing investors or from your friends. By the way, one of the founders is, it's extremely rare, but one of the founders did this thing. That founder records every meeting with VC they do, and then they send these videos to me to tell me, to ask me what they did wrong and what can be improved on that pitch. Amazing. Totally recommend to all founders.
I appreciate you giving very specific insights and kind of this idea of directness that you kind of hinted at. Now it's lighting up in my brain. So thank you for sharing that. I wanted to talk a little bit about your earlier career journey when you were working at, I think, Google, and you can talk more about like your tech career. And then you started investing as an angel, and you made quite a few of very successful bets. So could you talk about what got you into investing and what helped you figure out those early successes so early, ahead of the curve?
Thank you. So yes, it's a very interesting journey. So because I joined Google almost right after the college, and I graduated in computer science. And since 12 years old, I was coding, and I was absolutely confident that I'm just a computer guy, that I want to code, that I want to be with computers all the time, that I want to really like tinker and build things. And after, I think it was like 4 years at Google and really tinkering and building things a lot, I realized that that's not enough for my personality. And that's not enough from 2 perspectives. One is that I wanted to really help other people grow. And I think after 3 years at Google or so, I really asked to get an intern. Then I got 2 interns, and then a couple of years later, I started being a manager, because it wasn't enough for me to just sit in the corner and code. I really wanted to figure out how I can expand my ability by helping other people, by getting, scaled in a way. But and that's also when, after like getting interns and getting some taste of leadership and mentorship and helping others, that's another thing when I felt that it wasn't not enough to even be an engineering leader. And obviously at Google, it was really, really, because it's a big company, very structured, it was very, very difficult to add any business kind of work or requirements to my job, because my job as a software engineer was, make sure the code is right? So, and I was looking, it's like, okay, I have this job that I like, but I also want to have some business exposure. And that was actually, I think, after me going for several years to a lot of conferences as a business conferences as a Google representative, and talking to a lot of startups, especially very early startup conferences in Eastern Europe. I remember that one of the very first conferences was this bar camp in Kiev that was in 2007, 2008, when I met a few local founders then when the ecosystem pretty much didn't exist. And I was like, wow, people are doing really interesting bets. People are entrepreneurs, people are trying new things. And I want to be involved in this somehow. And I was looking for the ways to be involved. And as I mentioned before, it's very, the advice without money is always taken less seriously than advice that comes with money. And thankfully enough, Google paid well. So there was a moment when I met some founders, and I was like, "Wow!" I think I think it's a good story when I met the founders of PandaDoc, the guys also from Belarus, and I found them through some startup contest where they won, and it seemed like they have a really good idea, and they seem to be really interesting people. So I met them, and what I found is that they were fascinating. I was really interested to learn more about them. I was really interested to be involved. I was absolutely sure they will be successful, but it was very little that I could give them in terms of advice because I didn't have enough experience at that time in business or investing or startups, but I had experience as a software engineer. So it made sense. And I already had some very few, one or two friends who started doing angel investing. I asked for advice here and there, and I ended up investing. And then I built a relationship on the heels of the investing, right? So I learned from them what they're doing for the business. I learned from them how they're fundraising. As I said, like, because I was an angel investor, it was absolutely clear to them that I'm not going to invest again. So after I invested, they changed that. They didn't perceive me as somebody they need to pitch to. They could tell all the absolutely real thing that's happening. And I was able to see how the business has been built, how they are fundraising. And in parallel, I was looking at other startups, and I was comparing to the first couple of startups that I invested in. And after a few years of investing like 5 or 7 startups, I started to be at the point when I could give advice about investing based on those previous experiences, right? So, and basically, when founders ask me, what do you think about my company? I can tell them how this company compares to the companies I invested in. When they ask me, what am I doing right or wrong in terms of like pitching investors? I can tell them that, you're missing this part of the pitch, or this part of the pitch is not compelling. And that was very initial advice I could give, even after a year or two of angel investing. But then it became, of course, deeper, right? So I could understand deeper how the next rounds go, how to engage bigger investors, what kind of goals and KPIs to reach for, and why it makes sense for them to move to the US. I remember PandaDoc guys, I basically caught them on the plane, figuratively speaking, right? So it's like they were about to move to US, and they didn't have really strong connections in the US yet. So I was able to invest in European valuation while they moved to the Silicon Valley and grew their network and started to be a very typical Silicon Valley startup with appropriate network and valuation. And that's such a clear example that I could explain to others when it wasn't obvious. Right now, of course, the whole startup ecosystem matured in the whole world so much that a lot of these things that needed to be said 7 years ago are now obvious to everybody.
So it looks like with PandaDoc, it was a very direct exposure to founders.
Yes.
But you made over like 100 angel investments. Were they based on such a deep kind of connection to all of those, or were you able to see some patterns and things that kind of resonated with you and be more like, I don't know, process-oriented versus relationship-oriented?
I still think that the most interesting and the most, fruitful investments are those that have strong relationship component. But yes, I did, of course, in order to go to over 100 investments, you need to do some process. approaches, right? So for example, you need to really understand the lists of green and red flags. You need to understand which opportunities to spend less time on, and you need to have access to a lot of opportunities, right? So I think the one important thing that to all beginning angel investors is look at a lot of deals. You cannot invest in more than 10% of the deals you look at, but it's better to invest in 1% of the deals you look at, because only this way you can be, you can pick really distinctive deals, because every deal by itself always looks like a good deal, almost always, right? But when you look at deals as an aggregate, you can understand things like what's a good traction, what's a strong track record, what's a good valuation, things like that. And all of that was part of the process. And of course, there were a lot of things that I needed to learn, is that to understand, what is a right bet when you don't have traction in the company yet, but you have a really good team and a lot of promise. What does it mean to have product market fit, and how much it's worth? If the company has product market fit, what's a reasonable valuation? If a company doesn't have product market fit, what's a reasonable valuation? How to understand things like runway, how to understand things like growth rate, right? So, okay, it's like the company has product, has revenue, but their growth rate is so low, how to understand market size, right? So because, how some companies look really good on paper, but then you understand that they're super niche, right? So, and they will never become big companies. How to understand expected multiple returns, right? So, and one thing that almost nobody has out of angel investors from the start, but it takes a few years to understand what's your risk appetite and reward appetite, right? So, and I personally understood that I'm much more in like unicorn hunting area rather than like being cautious, right? So, and I know a lot of angel investors that are looking for 3x exits, and they would pass on a lot of like crazy looking deals, while I am much more in this area where I'm looking for deals that can return 100x, and the deals that are capped upside and capped downside are not interesting at all. So let's focus on those that are uncapped the upside, even if the downside is really like risk of failure is really strong.
So you've mentioned some situations where a startup may find themselves with a weakness. They may have a lot of strong areas, but they find themselves in a tiny niche, or the growth rate is not there, but everything else kind of seems to be right. What can they do to improve the way they look, or the way they pitch, or get to the right investor? And can they be successful, or do all stars need to align to get to that 1% of companies that actually get funding?
I think it's very important to zero in on the concept of right investor. So there are so many companies in the world, so many startups in the world, but actually only a small slice of them are a good fit for venture funding. And we are, of course, looking for companies that fit our fund, fit our approach, fit our portfolio expectation. But it doesn't mean that the companies we pass on are not good companies. It just often means they are not fit for us. So I would say there are several approaches. First, as a founder, understand, does it even make sense for you to take venture money or to go for venture money, or is it a waste of time? A lot of founders waste a lot of time going after venture money, never get it. Or even worse, they get it on the one round, never get a second round, but then the investor from first round end up forcing the company to do something that's not in the interest of the founders, like, for example, sell or something, right? First of all, a lot of companies are not fit for venture investing, and it's fine. It can be still a successful company. I have friends who have made lots of money, lots of success, built great teams, had a lot of impact without ever taking venture investing. And this opens you to a lot of different business models, a lot of different exit models, things like dividends, right? And so on. Like, for example, the most simple thing that if you are building a company that creates mobile apps that people subscribe to for like $10 a month, $20 a month, most likely this is not venture backable, but it's still a good business. If you can figure out CAC LTV to build a good subscription app, you can figure out how to get investment for this, most likely from the debt perspective or publishing perspective, and build a really big successful business. Just don't pitch us or other VCs. That's one. Another thing is, depending on your niche, you can actually go to VCs that are, or angel investors that are looking for 5x, 10x returns, as opposed to investors like us that are looking for 100x returns. For example, just yesterday, we passed on a company that we think, in the best case scenario, can return 20x. Good business, but probably capped upside 20x. They've got other VC investors already, so we are not the first ones they pitch. And there are a lot of concentrated VCs that are looking to invest in 10 companies from one fund, and they're looking for none of those companies to go out of business. They're looking for each of those companies to return 2-3x, and then the whole fund will return 3x. Great. So go for those VCs. But our VC will not invest, because for us, it's not going to be a fund returner. And or there are deals where it's like so obvious that this is a short-term deal, right? So for example, I've been pitched this all the time. It's like they say, oh, the founders know what they're doing. You can invest at 5 million valuation now, and then they're already talking with like Google or Facebook to sell their company for 10 million next year. No, I'm not investing. But a lot of angel investors will invest, because doubling your money in a year sounds great, right? So it's very important to know what's your like structure of risk reward, and therefore what kind of investor you're looking for.
So you've talked in different answers about this, but could you summarize the ideal profile of a founder for you, and what's the best kind of way to pitch to you if the founder thinks that they are the right fit for Geek Ventures?
So the best type of founder, of course, immigrant to the US. We look at different kinds of immigrants, but the best is like most recent immigrant to the US, who really knows their business. So for example, whatever area of business they're doing, they've been working in this area for 5-10 years. And hopefully not only one person, the CEO, but like one or two co-founders as well. If they're repeat founders, it helps, though we also invest a lot in first-time founders. They operate in a market where total addressable market is at least $10 billion a year. So if you are operating in a TAM that's lower than that, we will not invest. And you are aiming to grow at least 2-3x year over year for the next foreseeable future. You are committed full-time to your company for the next 10 years. You are not looking to sell your company for 50 million a couple of years down the road. That you are actually looking to build a $1 billion company or $10 billion company. And you understand your customers really well. It's key for us that we invest in companies that not that just have ideas, but that have validated these ideas with their customers, and found very strong proof that their customers have this problem and want this solution. So yeah, that's pretty much it.
On a different note, is there a book that you're reading right now, or a couple of books that you could talk briefly about?
So sure. One of the things I am one of participants of the most exciting Kickstarters of all time. Brandon Sanderson is writing books this year and sending them to those who backed his Kickstarter last year. One of them is called Yumi and the Nightmare Painter. That's a sci-fi book. I really enjoyed it. It's really like giving me a different view on the world. And out of less sci-fi and more like serious books, one of the really interesting books is Power Questions. So yeah,
I actually love that one a lot. It's my kind of book I have on my iPad when I go to a meeting, I always, okay, what are the power questions I could use there? Like what, and one of the questions I want to ask you, it's actually from this Power Questions book. Is there anything I should have asked you, but I haven't asked?
Yes, I actually, that's great. So because one thing they didn't ask is mentorship to other VCs, right? So, and here the thing is that it's very important for me not to support just founders, but also support VCs, because the ecosystem benefits from more VCs, more successful VCs, and more collaboration between them. So one important thing that I think I should do and other VCs should do is help others be successful VCs, right? So from that perspective, I try to meet with VCs, both more experienced than me and less experienced than me, every week. I maintain a group that I administer of VCs that are running their first funds and help each other with a lot of questions on how to run a VC fund, who to hire, how to figure out the right allocation, how to pitch LPs, things like that. So, and I think this is very important. Whatever you're doing, whatever your profession, whatever you learn to do, try to find somebody who is a little bit early on the path, and try to find many somebodies who are earlier on the path and help them.
This is awesome advice. And thank you so much for sharing a lot of insights that I'm sure will be helpful both to VCs and founders alike. So thank you for being with me and having this conversation.
Yeah, thank you very much, Igor. Thank you for inviting, and I hope this is helpful.
Ihar, thank you for sharing your investment insights and your commitment to supporting immigrant founders. Your passion for finding and nurturing talent is both inspiring and transformative. This episode of Slice of Mentorship was brought to you by Traction 5, a system that aligns with our mission to empower strategic partnerships and foster innovation. Traction 5's approach to mentorship relationships resonates with the entrepreneurial spirit we've explored today. Join us next time for more engaging conversations from the world of mentorship. See you in the next episode.